as long as you come in when it's reversing, as long as you come in when a drop happens, as long as you buy an undervalued company that's so good, so growing, so cheap, and the market just batters it down, that's where you can take advantage. That's where you can start to win. That you don't buy when it's bullish. If you are an investor, you wait until it becomes so cheap to ignore. You come in when a lot of the parameters are showing you already that this is the best time to come in, because this is something that's good, growing, and undervalued, and that's when buy and hold works. I want to talk about buy and hold investing for all of you. Comment below if you like buy and hold. Comment buy and hold if you think buy and hold is a good practice. It's something that will make money for you. Or comment I don't like buy and hold. Or comment avoid if you don't think buy and hold is a worthy investment strategy as well. The whole context of buy and hold is basically you have to be an investor. Buy and hold will not work if you are a trader. Buy and hold is not for traders. Buy and hold are not for people who want to buy and then it swings up, sell, take profits. That's not for buy and hold investors. Buy and hold is not also for position traders, meaning people who want to follow the trend as well. That's not the whole narrative if you want to do buy and hold as a technique for your trades. Buy and hold is really for investors. But the power of buy and hold is not just waiting for it to go up quickly, but sometimes it requires patience, that there might be a year or 2 years that it might not go where you want it to go. It might not go up, but it might suck on the first 1, 2, 3 years, but on year 5, on year 7, you're up 1000%, and that's the beauty of it. That's the Warren Buffett style of investing, that you're willing to sleep on money. And a lot of people get scared about stocks because they place an amount of money that if it goes up, jackpot, but they also place an amount of money they're not supposed to put there. You only put money in the stock market that you're willing to expose. You only put money in the stock market that you're willing to lose. You only put money in the stock market that if it goes to zero, you can sleep well at night. You only put money in the stock market that should not be touched. It should not be money that you will use later. That's why that will give you the confidence to do buy and hold. So my suggestion to all of you, if you want to do buy and hold, your window should be at least 10 years. Your window should be relatively longer. Your time horizon should be relatively longer. If your window is shorter, then a better scenario would be you might be better off trading. You might be better off being a position trader or a quick trader as well. Now, we've already established that buy and hold works if you are an investor. Buy and hold works if your timeline is long, but it doesn't stop there. That's why over the video, I've been hammering that if you are an investor, you need to spend a lot of time on fundamentals. You need to spend a lot of time knowing what the company is, because buy and hold will work if what you're buying is growing. Buy and hold will work if what you're buying is a good company. Buy and hold will work if the company that you're buying is undervalued. So those three things in the company must be very, very good. Kung may dividends pa yon, much better. So I repeat, what will make the company good as a buy and hold target? Number one, the company needs to be good, meaning a lot of the fundamental ratios are showing buy signals. Number two, the company is growing, meaning you see the company in terms of sales, in terms of income, start to increase. If the company has dividends and the dividends is even increasing, that's a much better factor, because you have to remember a large part of investors in the market are mostly funds. A large part of the investors in the market are mostly large institutions. What's more important for them, a larger criteria for them to buy, is basically what if I get a good return as 5, 6, 7% return already from dividends that I will get. So a big criteria for you to know that the company won't go to zero is as long as the company has dividends, as long as the company is spitting out cash on a regular basis, you know funds will get them. You know that it's something that you can hold on to also for a very long time, because as long as the company gives good dividends, you know that there will be investors there. So good, growing, dividends, then it has to be undervalued. It doesn't make sense buying a stock that's good but that's not undervalued. There has to be a large upside for you in terms of the valuations. You need to spend a lot of time knowing what the valuations are. You need to spend a lot of time knowing if what you're buying will give you enough upside. It's not just about buying a good company that's growing, but it has to be undervalued. It has to be something that you know, and you know na sulit yung pagkabili mo. Because if you don't buy something na sulit yung pagkabili mo, the whole narrative there is this. It's just like you bought a condo in BGC, sobrang gandang condo, dahil sobrang mahal ng bili mo, you don't have enough upside here. You have to remember, as an investor, the upside is very important. What does that mean also though? It means that, hey, if you are buying a stock that's undervalued, there will be times that the stock that you want is overvalued. It means also that you need to have the discipline that if it's expensive, you're not doing anything. It also means that if it's not worth buying, it's too expensive, it's too high, you need to have the discipline to stay in cash. Now, don't get me wrong, Warren Buffett has large positions in the market, but he also has a stockpile of cash right here, right now, because there are a lot of stocks that he wants, but they're undervalued. He's not just buying just for the sake of buying. He wants to buy where he gets a return on it. He wants to buy when he gets something off of it that will make him money, when it makes a lot of sense for you to come in. There has to be discipline, that you need to have the discipline to be in cash if there's no buy signal coming in. So for a buy and hold investor, your goal is to stay in cash. The buy signal comes in, it's good, growing, undervalued, has dividends, boom, pasok ka, then just wait. You sit on it up until your returns come in, up until your parameters for selling also would get hit. If you remember this 2008 financial crisis, after the 2008 financial crisis happened, a lot of the people who bought during the 2008 financial crisis, a lot of the people who bought when markets started to drop, they made a lot of money, because the best way for you to take advantage of drops like that, the best way for you to take advantage of recessions and do buy and hold is when it drops, there's a recession, boom, massively moved in as well. That's the reason why Warren Buffett's storing a lot of cash, because probably he thinks that it's not just overvalued, but bull markets don't run forever. There will come a point in time where it will have to correct. There will come a point in time where it will have to change itself. There will have a point in time where a lot of the ones that have been overvalued, people buying at higher prices, when a lot of the smart investors start cashing in, markets start to drop as well. So this buy and hold work, it does, as long as you come in when it's reversing, as long as you come in when a drop happens, as long as you buy an undervalued company that's so good, so growing, so cheap, and the market just batters it down. That's where you can take advantage. That's where you can start to win. That you don't buy when it's bullish. If you are an investor, you wait until it becomes so cheap to ignore. You come in when a lot of the parameters are showing you already that this is the best time to come in, because this is something that's good, growing, and undervalued. And that's when buy and hold works. Buy and hold works massively if you come in at a very, 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 very cheap price and you're willing to hold, you're willing to wait. If you're not willing to wait a very, very long time, then buy and hold won't work for you. If you're not willing to wait to buy a stock that it drops in a certain price, that means your buy and hold is also not for you. If you see a stock drop and then you start to panic, buy and hold is not for you as well. If you buy a stock also and you see it start to go up and then you take profits quickly, then buy and hold is not for you. Buy and hold are for people with discipline and patience and cash, that are willing to sit on it, that they're looking for the returns that will happen, not in 2 months, not in 3 months, but when the market makes a mistake, makes the stock price go down, and you buy it, you swoop in, and then once it starts massively going up, that's when you start selling as well. And that's where buy and hold will help you win. That's where buy and hold will help you make wealth as well. I'm showing you different perspectives because I really believe that the stock market is not one size fits all. I really believe the stock market, what works for me may not work for a lot of people. What works for a lot of people may not work for me as well. That's why different principles, different strategies, different ways of thinking, different ways of doing, so that you get to find something that will work for you. You get to find something that attaches itself to you, and then you do that and you double down on that, because all I want for you guys is to win as well. All I want for you guys is for you to be able to reach your goals of financial freedom. That I really believe that at this point in time, the stock market is still the greatest investment in the planet. So this is Marvin Germo pushing you, edging you to reach for your dreams, to keep on pushing, to keep on hustling, that you can win, because the stock market is one of the greatest investments in the planet, that you can use your money to build this asset to give you repetitive returns, that you can use the stock market to help you reach your goals of financial freedom. Keep on hustling, keep on working, keep on pushing, because what you sow today, you will reap later on. This is Marvin Germo from Korea. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.